Hi and welcome to today's video. Today we'll practically see if shift frequency matters, like if you are investing daily, weekly, bi-weekly, monthly, half yearly, or even you have done the lump sum investment. Does it matter over a long period of time? So technique we are going to use is backtesting. Backtesting is general methodology for seeing how well a strategy or a model would have done exposed. So it's basically seeing how history has performed and if you have followed that in the past, it would have happened. It's not a guarantee of the future, but still can help you get the conviction and confidence in your market. So now let's see and let's move on to the screen. So if you see Nifty 50 data from its time of inception, you can see it's been going up with ups and downs over the way. But if you see data is from 1999, 1 Jan, and today is 6 Jan 2023. So it has given the upper run always. So to show the shift frequency matters or not, I will download the data from Nifty website. This website link I will give in the description. So now let's choose the date of 20 years back. Okay, we have that. Let's download it. So now we have the data. So if you can see here, we have data from 5th Jan, like from yesterday. We have the close date for that. And if I sort it by date to show 6th Jan 2003. So we have open, high, low, and close. We will just require data for the close one. Just delete these ones. Okay, so now let's make different columns for it. So let's make daily, and then we have weekly. Let's have bi-weekly also. Then we have monthly, yearly, and also one lump sum. Like you invest some amount on 6 Jan 2003. So suppose we are putting, if we are going for daily, we are putting 2000 rupees, and weekly is 10,000, and bi-weekly is 20,000, monthly is 40,000, and yearly if it is, and we are putting 5 lakh rupees. And for the lump sum, let's consider the amount 10 lakh rupees. We are done with the daily part. So if we are putting it weekly, that we are having is we will put 10,000 weekly. 10,000 means like on every 5th day we will put it. We will put the data. Similarly, I'm not doing the copy paste. I will just drag and drop and just be back. This we will consider as the 1 unit amount. Okay. So let's just divide. I just extrapolated this till the end. We see we are having this. Now let's just do this for all. And just we will be calculating the total. Now let's just calculate the total. Now let's just extrapolate this to all. Okay, there is some issue here. Okay, no. Okay, so if you see now here, so on daily we have invested around 99 lakh rupees, and 99 like in mostly if we are putting daily, bi-weekly, weekly, or monthly, we are getting almost same amount, and also in the yearly also we are getting around 1 crore rupees. But in lump sum amount, if I can say, so we have just put 10 lakhs. So let's just make that 1 crore also. So if you can see here, we have got the maximum number of units if we have put lump sum, but it's not possible for everyone to put just 1 crore and forget. So that's why SIPs are more advisable. But now let's calculate the XIRR. So what is XIRR? So XIRR as per definition is single rate of return which when applied to every installment. Like here we are doing installments. So we would give the current value of total investment. So now let's just calculate the investment. So for XIR, we will require these amounts in negative and this one in positive. So now let's just add one more column over all. Now if you see the formula of XIR is like if in Excel we have the formula XIR where we have to put inflow and outflows, where inflows are the positive amounts and outflows are negative, which we are putting in the SIP, and the dates on which we have put, and the final date will be today's date, which will be put here. So we will be putting here let's 66. Okay, so here we have put like we have a total of how much investment we have done. So now we have total of for daily we have 2244.16 units. So now let's calculate what amount we will have if we sell it today. So it will be unit into 1 unit price. So if you see, it's around 4 crore. So let's do the same for others. This is the highest one. For others, if you see, it's around the same, just it's 4 crore. Mostly all are 4 crores. But for this, it's around 16 crore, I think. Let me do it. Yeah, it's around 16 crore, but that's a normally I can say, because 1 crore in lump sum is very difficult to be put. Like if we consider year 2003. So now just it's pretty clear from this calculation also that there is no much difference if we do SIP in daily, weekly, bi-weekly or monthly or yearly. But now just do XIR also, and let's prove that also. Now for XIR we need all the values. So now let's just put E2 here. Like we need first the inflows and outflows, and then we need the date. Let's put E2, and let's just close the bracket. Okay, now let's do the percentage. Have some zeros here. Okay, so we see we have XIR of 12.47. Now just do it for all, and so if you see here, for daily, or even if weekly, bi-weekly, monthly, or yearly, the XIR comes out to be 12.484. Like it's around 47 only, like 12.5% we can say. So if you see, there's no much difference between the XIR. So you are growing your money at the same pace. Even if you are saying that I want to time the market, you can't even time the market. So instead of wasting your time in thinking of timing the market, just put your systematic plan in place, even if it's few hundred rupees. I'm not saying you need crores. So even if you start with a 500 rupees, it will be big change for you in the long term. I did this experiment last year with 20-year data from that time, and it helped me gain conviction and confidence in my long-term plan. So I think this might also help you. See you next time. Nikhil Dhawan signing off.